Hey everyone, today we're going to check in on the progress of my Roth IRA at tastyworks. The date is Friday, March 5th, and the markets are in absolute turmoil. It is a bloodbath, a shit show. It is absolutely disgusting out there. But there is one tiny, shimmering sparkle of light coming from my Roth IRA at tastyworks, and I'm going to focus on that. So this is my Roth IRA at tastyworks. I've got one position on, and that is my SPY position. I'm long 106 shares of SPY, and until very recently, those shares were appreciating quite nicely, but the sell-off is winning right now. I'm down about $680, 687, who's counting? I'm down money in my SPY shares, but the shining sparkling light that I'm talking about is not that. It's underneath it here. It's my option, my call that I sold against 100 of those shares. I sold a $397 call expiring on March 19th, and it looks like I sold it for $464, but it's not quite that simple because I had a couple rolls in there. If you look at the order chains, I'm gonna change this to, it was a while ago, let's change it to 180 days. We can see all the activity that's happened with this position. And I actually got into this position by selling puts to start with. So I explained this in a previous video, how I got in at the price of $379, but also collected $199 of premium along the way. So in effect, I kind of got into the position at $377 per share. Once I was long those 100 shares of SPY, I sold the covered call against them. I initially sold a covered call for $1.48 in credit, rolled it for an additional $2.70, and then an additional 30 cents. And that gave me an average trade price, all in, of $4.48. And right now that is marking at 29 cents, which would give me a profit of $419. And there's a couple of things I was thinking about doing at this point. Certainly I want to close this out, book this profit, and close this out, and then sell a new covered call for some price lower, much lower than where I sold this one. I sold this covered call, it was a $397 covered call. I'm not exactly sure where I'm going to sell a new call, but it's going to be significantly lower than that. I mean, look, the price of SPY right now is under $374. And it's moving around fast. So I'm looking at $421 of profit right now on this covered call, and I'm gonna go ahead and close it out. And that's at, let's just make sure, $421 profit. I'm gonna go ahead and just close this position at 27 cents. See if I can get filled. You see initially gives me a price of 27. I'm gonna lock in at 27 cents. Review and send. And send the order. Oh, that was filled right away. So if I turn on top closed here, you can see that that position is now closed out. Let's go back in and look at that. Yep, closed out, 27 cents. Cool, so I'm gonna go over to my spreadsheet where I'm tracking just my Roth IRA. I'm gonna mark that price here, 27 cents, $472 in profit on that one. And now one way to look at this is that my basis on those shares is now reduced to $372.35, which is actually below where SPY is trading for now. So if you watched my original video about my plan to move part of my Roth IRA over to tastyworks, you know that part of the plan all along was to sell covered calls against SPY and not have them get called away, to always be rolling up and out for credit forever and ever and ever, and just never have those shares called away, and collect the premium along the way just to juice the returns on SPY a little bit. And keep in mind, this isn't a Roth IRA, so it's long-term buy and hold. I want to hold the shares of SPY forever. And so the idea is that I want to hold the shares of SPY forever. I just want to sell covered calls against that when I can, collect premium and boost my returns. And as I collect more cash in the account from selling premium and I earn enough to buy more shares of SPY, that's exactly what I'm going to do. All right, so what am I going to do with this $472 profit? Well, I'm gonna buy another share of SPY. I can afford one more share. As soon as this settles, I'll have enough in my account to buy another share, and the rest of the profit will just sit in my account for now. And so the other thing I need to do at this point is sell another call. And I think I want to go for, last time I went for about a 45 day till expiration call. And I want to try something a little different. I want to try to sell a weekly dated call option and figure that will give me more profit per day if it works out. My 106 shares of SPY are just sitting there lonely. So I'm going to go ahead and sell another covered call against 100 of those shares. So I'll go over to the trade tab. And last time I sold the call that was pretty far out. It was about 45 days till expiration, which gave me a large premium up front, but I had to wait a long time to close it out. I had to wait all the way until today. I think in the spirit of getting as much profit per day as possible, I'm gonna try to sell a call that's a little bit closer, actually a lot closer in. I'm gonna sell a March 12th weekly option. It's 7 days till expiration. Let's check this out. Right now, SPY is selling for around 374, 375. I'm gonna sell a call that is not that close to in the money, but not as far out as I went before either. I'm gonna drop down to about 30 delta. You know what, maybe we'll just make it a nice round number. Maybe the 380 strike. The 380 strike, this is a popular one. I'm looking at the volume here. It's got significantly more volume than the strikes right around it. Not too much of a concern, but interesting to note. I think people just like me like the round numbers. So the 380 strike is very popular. And it's going for somewhere between 277, 280. I'm gonna put out my fishing pole at 280 and see what happens. Let's see if I can sell this for 280 in credit. Well, the price is dropping down here, but it's bouncing around so much that I think it might be worth just giving it a try. I'm gonna go ahead and send this order, put out my fishing pole and see what happens. All right, so here under my positions, you can see I've got this order working. It's about 9-10 cents between my limit price and what it's going for right now. See if I get filled. And if I do get filled, let's talk about what this means. So at that point, I'll be short a 380 call on SPY that expires on March 12th. That's 7 days from now. And if the price of SPY stays under 380 in that time, then I will keep the entire $2.80 of credit. Now what happens if SPY rises? Well, if it rises but stays, under 380, that's okay. But if it starts coming up really quick and coming right up to 380, at that point I'm going to roll my position out in time, possibly also up in strike price, but making sure to collect a credit no matter what I do. And the idea there is to avoid getting my shares called away. That's the key to this for me, is to keep my shares, sell my call, and not have those shares get called away. The price is not cooperating here. It's not meeting my limit price. I could drop the price a little. Well, for the sake of the video, oh, no, it's creeping back up. There we go. It got filled just like that. Wow. Okay, didn't see that coming. I was thinking maybe I'd have to drop my limit order down to 270 or so, but okay, I'm filled at 280. Like I said, the thing now is to wait. I'm gonna have to keep a close eye on the market. That's one thing to note. I gotta keep a close eye on the price of SPY. And as that price, assuming the price does rise and get closer to 380, I'm gonna be looking to roll my call out or out and up. I'm gonna go back over to my spreadsheet and put that in here, $2.80. And this was done on March 5th, 2021. All right, let's enter in the price of SPY here. And I never filled this in. I can look and see what the price of SPY was on the 23rd of February. And I'm not gonna fill in my basis here until this position is closed because of course, as you can see, I don't always let it go all the way to expiration, or at least in this previous case, I closed it out at 27 cents. So maybe I'll wanna do something similar here. But just have to wait and see. But let's say that I did let it go all the way to expiration and it closed out for full profit, 280. and it would bring my basis down to 369.55. Nice. If you watched my previous video on this topic, you know that my original plan was to do exactly this, to own 100 shares of SPY, sell covered calls against it, but also keep some cash building up in another fund in VTI, the Vanguard Total Stock Market Index Fund. And then when the price of VTI got enough that I could buy another 100 shares of SPY, I would sell VTI and buy those 100 shares of SPY and repeat that process. Well, I simplified the plan a little bit. I'm cutting VTI out of the mix in this account entirely. We're just going with SPY. So, I've got 106 shares. As I sell premium and collect that, I will just keep adding on to my number of shares of SPY and grow that. And of course, every increment of 100 shares that I can get is a magic number, because that means I can sell another covered call against it. All right, so that is the latest on my Roth IRA at tastyworks. I would say it's going great. I really like this strategy. Don't forget, the alternative to this for me was basically total market index fund and not selling covered calls, right? So back in Vanguard, I had the Vanguard Total Stock Market Index Fund, and its performance is just about identical to the performance of SPY. So what I'm doing here is I'm getting market performance by holding shares of SPY, and I'm also selling covered calls against it. And as I mentioned over and over, the important thing here is that I'm not gonna get called away. I know I can't control that completely. It's certainly possible that the counterparty could exercise their call at any time. In theory, that's possible, but it's very, very unlikely. And as long as I keep rolling as the share price comes up to my call strike price, and roll that out, roll it up and out, and collect a credit, that's the game plan. I think that'll keep the shares in my possession. And if for some reason they were ever called away, then, well, I would turn around and right away just buy them back. I've been doing the strategy for less than 2 months now, but so far so good. I really like it. It's like, hey, I'm gonna get market performance for low cost, and for extra bonus, I'm gonna collect some premium along the way. Really hard to beat that. Thanks for watching. Remember to like and subscribe. I'm putting out new videos every week on saving, investing, early retirement, and of course, options.